We've got Mr. M.D. Mallya of Bank of Baroda joining us on the show. Mr. Mallya, 75 basis point cut in the CRR. Would you say you're surprised, even if pleasantly?
No, I would say that we were expecting the RBI to quickly act on that because the liquidity has been under pressure for some time now. So therefore, the cut of 75 basis points is a welcome initiative in this direction.
Sure, but Mr. Mallya, there's been this rumor has been carrying in the market. It was in the market last Friday, driven, put out largely by people in the equity markets that you'd see a CRR cut as soon as last Friday. It didn't happen. You've seen the CRR come today after the markets have closed. Now, would you say that this is some sort of a deviation from the current governor's practice, where you've seen rate action only on policy days?
No, see, because I think that the decision has been driven by the fact that liquidity has been under pressure, and therefore the policy review is still some time away, and I therefore think that RBI has acted well in time.
Sure. Now, 75 basis points has come today. Do you expect anything additional from the RBI on Thursday? Because the CRR part has come, I think, after you've seen 75 basis points. None of you may be expecting further CRR action on Thursday. But given the fact that you've seen weak GDP numbers, weak IIP numbers again within that, do you expect that on the repo rate, the RBI might possibly make some sort of move, possibly a 0.25 percentage point cut on the repo?
It's difficult for us to comment on that because it's the prerogative of the RBI. But then going by the consistent policy, I think RBI will certainly weigh between the inflation, anchoring the inflation expectations vis-a-vis the growth. So therefore difficult for me to make a prediction as to what the RBI would do as far as the policy rates are concerned. So
would you still believe then that interest rate cuts, or rather cuts on the repo rate, will only come in April post when we go into the new financial year?
So I think we will wait for the RBI to announce their policy. But at this point in time, I would say that we were all expecting a CRR cut, maybe to the extent of around 50 basis points. So welcome initiative.
So this is 75. So you'd say this is a huge positive really for you.
That's what is a welcome initiative which they have taken.
Sure. Again, Mr. Mallya, just focusing on the liquidity picture, 75 basis points gives you all back something like 48,000 crores. Going into the next week, when we again see this whole liquidity deficit picture crop up again, where do you see the levels settle at after you adjust for the 48,000 crores?
See, one thing we should keep in mind is the fact that the advance tax payments are likely to be made in the next 1 week or so. Therefore, the pressure on liquidity would have continued more had this cut not been effected. And therefore, to that extent, it gives a relief to us in terms of the overall liquidity situation. But then it may take some time before really the whole situation comes to normal.
Mr. Mallya, putting in one question on the currency as well here. While the CRR cut of 75 basis points does come in as a surprise, how do you see the Indian rupee reacting when it opens on Monday again?
No, I think it could be on the levels at which it has closed today.
That is around 49.85 kind of levels, because we've seen a very huge range happen in this week. But do you think rupee would have really factored this all in?
Yeah, perhaps the rupee has been a little bit volatile for the last 2-3 months, given the fact that the overall situation perhaps has prompted it, including the oil bill, which has substantially gone up as far as the country is concerned.
George?
All right, Mr. Mallya, if I could just keep the focus on the liquidity situation in the markets. Most people we speak to believe that by the end of March, or towards the end of March, the liquidity deficit would climb to 200,000 crores. This is before we saw today's CRR cut. So, looking at the end of March, where do you see the liquidity deficit situation at?
See, as far as the 15 days going to the end of March are concerned, one would still have some pressures because of the advance tax payments, number one, and number two, on account of perhaps the demand on credit because of the year-end disbursements. So these are the two facts which could put some pressure on the liquidity. But then when the government expenditure starts taking place by the end of the month, perhaps the things will start improving, perhaps going in the first week of April.
Sure. So yes, in fact, Mr. Mallya, that was my next question. Towards the end of March is also expected to be government spending, large government spending at that. going into the second week of April, where should we expect the liquidity situation will be at?
I think as far as my assessment is concerned, going in the first fortnight of April, the liquidity situation should be back to normal. Government spending taking place. Maybe the demand for credit will considerably come down. Maybe there would be some inflow into the system as far as the overall drawers are concerned from the credit point of view.
Right. So when you're saying
situation should improve.
Right. So when you're saying back to normal, are you saying that the liquidity deficit will drop back to minus 1% NDTL, which is what the RBI has indicated is a level that it's comfortable with?
Yeah, it should be in that level. That's about 50,000 crores level. Either way, I think that should be the level which one can look at.